Everybody, thank you for watching Mentorship Monday. My name is Matt and you are on our YouTube channel for the DeRosa Group. Thank you for watching. To submit questions to Mentorship Monday, email them to helpme@derosagroup.com. That's helpme@derosagroup.com, and we will answer them right here on our YouTube channel on Mondays for Mentorship Monday. Today we've got two questions. The first one is coming from Nick, who is a college student in Chicago. Nick, thank you for submitting your question. Nick is, let's see, he is interested in getting into multifamily apartments. Nick is in college right now, but looking to get into multifamilies. Hey, Nick, go big or go home, right? So congratulations for thinking really big for when you graduate. So I'm excited to hear how you do. He's got a good knowledge of multifamily investing. He's wanted to know how to determine market cycles. For example, how can I determine if a market is peaking, bottoming out, or on the rise? I think it's a valuable aspect to real estate to understand. However, I'm not exactly sure how I can determine this. Again, thank you for all you've done. Well, you're welcome, Nick. Okay, let's talk about market cycles, Nick. So it's really just a matter of you want to study job growth in a market, okay, and you can trend this out in like an Excel chart or something like that. You want to trend out job growth versus housing prices, okay? And if you see that job growth continues to be on the rise while housing prices are on the rise, you're probably going to continue to see a rise. It is my humble opinion, you have to talk to an economist or talk to somebody who does a lot of data study more than I do, but I tend to think that real estate tends to trail behind job growth. And so what that means is that you'll see real estate on the rise and job growth will start to fall off, but real estate will continue to rise until it doesn't, until it trails off again, right? So you want to study the two of them. And also, to be honest, you want to find the market where job growth is kicked up, but real estate is not kicked up it hasn't caught up yet. It hasn't started to peak yet. It hasn't started to grow yet. So that's what you really want to look for, because you don't want to go buying in towards even the middle or even towards the end part of a cycle. You want to get in the beginning because you're young, Nick. You're a college student. You're just getting into this thing early. So you've got the time to play the uptick of a market. I wouldn't try and get into a market that's already on the high side, that you're seeing in the media, that's on the top 10 list of growing markets or anything like that. Because when it's out broadcast like that, that means everybody already knows about it. You're not the only one to have read that article about the top 10 great real estate markets. So don't invest in those markets just getting in. So that would be the parameters that I use for evaluating a market. And also you just got to make sure that the rent to purchase price per unit spread is there, and when you're looking at a market. And that has less to do with market trends and more to do with just profitability. Can you buy in that market and make the returns you want to see? Meaning that if it's at $50,000 a unit is what you're going to pay, but the rents are only $300 a unit or something like that, where just there's not enough spread going off of calculations on the gross rent multiplier to determine what you should pay versus what the rents are. If that equation's not there, then that's not a good market either. So again, a lot of data. Hopefully that helped. And best of luck to you, Nick, being the college student looking to get into this business. I wish you the best. All right, now we got Terry, who is coming from Ontario, Canada. Terry, thank you for emailing your question to helpme@derosagroup.com. My question is can us Canadians find financing from American banks to buy rental properties, or would seller financing be the best? Well, seller financing is awesome if you can negotiate the right terms. I've purchased properties on seller financing deals and offered seller financing terms and stuff that we've tried to sell in that. But so seller financing can be great because you negotiate the terms that you want, but it's not. I don't think it's required to do business in this country coming in from Canada. I must say, I'm not in Canada. I'm in New Jersey in the United States, and I to the date of now have not done business with somebody coming down from Canada and buying property on their own name in the U.S. So I would say that that's probably it's a great question, and I think it can be done because I know Canadians that own property in the U.S., so I don't think it's that hard to do. But I will say you should probably ask the question on BiggerPockets to find the specific lender that's willing to lend to Canadians looking to do business in the United States. So my short answer is yes, I'm sure it can be done. Which bank to talk to? I don't know. I think that you should probably ask around and talk to some banks or put it on Bigger Pockets to sit out there on the forum post, and you'll probably get a bunch of recommendations from folks. So again, thank you, Terry, for asking questions to help me at DeRosaGroup.com. Thank you, Nick, for your question too. I really appreciate you guys, and I appreciate you guys for watching. So again, if you have questions, email them to helpme@DeRosaGroup.com. That's helpme@DeRosaGroup.com, and I'll answer them right here on our YouTube channel for broadcast on Mondays. Thank you so much for watching, guys, and hope you have a great and profitable week.